Most traders spend their lives trying to get an invite to this table. Tonight, we're pulling up a chair. We're at Uchi, a high-end contemporary Japanese restaurant in Miami's Wynwood district, for a raw, unfiltered look at an SMB trading team that generated nearly $50 million in yearly trading profits. This isn't a polished interview. It's a behind-the-scenes dive into the minds of Nano, mid-seven-figure pro, and Max, eight-figure producer, as they answer the hardest questions submitted by you, the trading community. Now, previously, we'd asked our Twitter trading community to submit questions for this top team. Nano and Max at this dinner stepped forward to answer those questions for you at this private dinner. Here's what you're going to learn tonight. 1, the importance of grading setups. The most prominent lesson is the extreme selectivity required for top-tier performance. Number 2, dynamic risk management. High-level traders do not risk the same amount on every trade. They leverage their best ideas with significant size. As Max says in this video, if you're not putting on as much risk as you responsibly can in those A-plus trades, then you're doing something wrong. 3, protecting your mental capital. Managing your mental capital is as important as managing your financial capital. For this team, focusing on a few massive 6 or 7-figure opportunities pays out more in the long run than trying to capture every small scalp. 4, responsible risk growth. Scaling a trading career requires a systematic approach to increasing risk without dampening your career. Nano and Max discuss how they scale. 5, leveraging modern tools and adapting to markets. The journey to becoming a master trader is iterative and increasingly aided by technology. Traders must remain humble as markets change. Lessons learned in difficult years, like they talk about quite openly, like in 2022, provide the blueprint for staying safe during future slow periods. Okay, this is going to be fun. Take out your notebook and get ready for 2 traders who will inspire you to be great. Hey, if you find this conversation between these 2 traders interesting, we've put together a special video, a day in the life of a top trading team with these guys and their team. Subscribe so you don't miss it.
If anything, theory, short puts.
Shorting puts probably works. That does make sense. Do you know if anything's moving pre-market already?
Nvidia's starting to go back up.
So we have a question from Andrea here. Hello, question from Germany. How many trades do you make on an average day? How many B, A, and A+ setups per year? Thank you very much. Yes, I like your videos. That's for you, Kurt. I like your videos. Okay, so I'll start off. In terms of B trades, those can come as often as 5 times a week, 4 times a week. But A+, I think definitively I can tell you if you're getting more than 1 A+ a month,
If that, yeah.
if that, you're probably too loose with your nuances. Would you say that's right?
Yeah, I think that what's very critical is that the risk differential between our Bs and our As is drastic. So for example, I think that we risk 5 times on our As that we do on our Bs.
Yeah.
So for us to level up that much, it has to essentially hit every single nuance. If I think back, right, and this is February 2026, how many A trades over the last 4 or 5 months? I can think about silver and gold in January. And then I think that we have to go back until probably October or November until we had truly a trade.
When things actually popped, before things popped.
And the reason for that is because we're gonna put so much more risk on those because over the last few years, we have so much stats and we have so many trades. We know that in the long run, us putting so much extra risk on these, it's going to work. So whether or not that this particular trade wins or loses, it's going to work in the long run. And that's why we put on so much more significant risk, but that's also why we're not taking as many of these. And being super critical with how we grade these trades is how we kind of like stay away from pitfalls and drawdowns, honestly.
Yeah, sounds about right. I think A plus setups, they need to be probably a hit rate of 90% plus. Because it's not often that they're actually the best risk reward trades.
A plus, I mean, if there's A plus trade and you get it dead wrong, you will screw up your month or your quarter.
Yeah, absolutely. Yeah.
Like,
and if you don't, then you're not sizing up enough.
Yeah. And I think that with this job, if you're not sizing up those best trades, then you're doing something wrong. Like this is ultimately a performance-based job. And if you're not putting on as much risk as you can responsibly do in those A plus trades, then you're doing something wrong. So.
I agree. Cool. All right, so we have a question from Joe.
Yeah.
How do you decide to forego your daily easy money trades? Wow, Lance is really just spreading across the whole community. And focus on a bigger opportunity with bigger EV, but less certainty.
Well, I think that at least for us, scalability is so important. You have to just like think about what is gonna really pay you out in the long run. And I think that this is kind of the like less is more theory, in the sense that us focusing on our absolute best and biggest trades is how we truly nail those A plus opportunities. There's only so much bandwidth that there is, and if you go in every day and try and capture each little scalp, there's just so much that we can do. But on those biggest opportunities, truly laser focusing on those, I mean, that's how we put up some of our best 6-7 figure trades.
Yeah, and I mean, I think at the end of the day, like, they're not mutually exclusive. Like, on the big days, I still look over and Max is still scalping, whatever it might be. Like, what stands out to me is like even the Beyond Day, we'll be hitting sympathy plays of small caps that are running, and you'll be trading for a 7-figure trade on Beyond, but you'll look over at some other small cap and be like, oh, I see a bid that I really want to hit here, and you're going to make 2 or 3K on the scalp, but you're moving 7 figures to something else.
Well, sometimes I do that just like piss you off.
Well, it works.
Yeah.
I'll look over, I'm like, why is he wasting his time on this? But we have bandwidth. We're trained to handle more than one symbol.
Yeah.
And 15 seconds sometimes feels like an eternity in trading when something is halted, for example. And you'll switch over, hit another symbol because you have edge there, and maybe you make an extra 5 or 20 grand, and that's worth your time.
Yeah, I mean, also I'd say that our mindsets, each day is totally different. One day you could be thinking, okay, I'm sitting here and like we're moving hundreds of thousands of dollars per day, trying to like focus and squeeze out an extra 5, 10, 15K. It's not a good use of our like mental capital. And then there are days where things are so slow and we're sitting there and we're like, damn, you made 4 grand on that? Right? And it really just is a question about evaluating that day. It's not really a question about losing touch with what the value of making the money is. It's more a professional evaluation of what is the best use of our mental and, honestly, in this job, physical capital.
Yeah, absolutely.
What's the solution when you find yourself repeating the same mistakes? That's a really tough thing. I'd say is that anytime that I know that I'm putting on kind of poor quality trades, one, I get that internal body like mechanism where I'm like, I know I'm doing something stupid. It's kind of like those like moments when we put on a trade and we talk to each other on call, and then 4:05 p.m. hits, and then I call you. I'm like, we shouldn't have done that.
Why are we so many contracts?
Yeah, like I know that. Like we'll be on call and be 3:55, and like I know I'm gonna be down tomorrow, and we are. I think that sometimes at least for us, by really differentiating, I think, how much we're like risking on trades, we keep like the mistakes to a point where it's not actually impacting our week or our month. Like for example, we put on a bunch of stupid trades. Not stupid, but like we're like, all right, we probably shouldn't have done that. We're not looking back on last year and being like, oh, it was the stupid trades that is the difference between what we made and what we could have made. I think that by further differentiating the risk separation and by consistently doing that, because like our risk has grown. I mean, we talk about risking, let's say 20, 30 grand on stuff. We were still talking about risking 20, 30 grand and only risking 300K on our A's. And now we're moving 500K, 600K on those A's. That is a massive separation in those A's that we're doing without also increasing our lower quality trades. So it might be a situation where it's a necessary evil, but at least we are improving our separation between what actually matters and what doesn't in terms of our stats and stuff.
Yeah, I mean, I think because of our grading system, making mistakes over and over again can be okay, so long as those mistakes aren't applied to B's and the plus.
Yeah.
You can make a bunch of started mistakes, and that's okay.
It's also like, how do you know what your A's are without understanding what like the lower quality trades were? Like we wouldn't have determined what our best trades are without grinding through all the BS of like the lower quality trades.
And finding the best nuances for those
like
A's.
How you develop a model, right? You can't develop a great trading model without seeing what goes wrong first.
Yeah.
Fabio's question, can you explain a clear method to increase the risk unit? For example, if I risk $200 per trade when I get 3R of net profit 600 over a cluster of 10 trades, rise the risk by $250. So I think that we're all the same in the way in which we grew our risk. In my eyes, each one of like my biggest trades has kind of led to the next stage of my risk. I think that you want to responsibly increase your risk as much as possible without putting yourself in any long-term harm. So for example, let's say that your risk is $1,000 and you put up a 3K trade. Okay, fine. Massive win. Don't increase your risk to 2,500 where you have two bad trades and then you give it all back. Increase it to a point in which if you use max risk on the next really great trade, you can keep yourself in that line where you are growing without harming yourself long term. Like for example, when we were really in that sizing up portion of our career, I was always like, man, we're like 4 daily stops away from giving everything back. But the way it's structured is that, one, if you were to lose that, then you wouldn't still have that same risk. But two, it's so important to like understand the risk of every single trade and make sure that no particular moment dampens your entire trading career.
Yeah, I think we've done a really good job. I mean, at making sure that any size up we've had has come from true consistency. And I think that you can't just take one win. I mean, here you mentioned that you'd want 10 trades right before you increase by 25%. It's probably a bit conservative, but something along the lines of what you want to look for. You want a lot of consistency before you find yourself sizing up a certain strategy. And I think just outlining what that strategy makes P&L wise and risk reward wise before deciding to size it up is what makes the most sense. And remember, just because you size up that strategy doesn't mean that something else is sized up. And we've made that mistake before. We're sized up as traders in general, and then all of a sudden I'm sized up in a strategy that I'm not that good in. And
I would also, just say this on like a more like serious note, is that I think that in this job, so much of it is mental, and especially when we're starting out, we both came from like similar backgrounds. You go from a point in which you're risking $1,000 to like 5,000, 10, 20, 50, whatever. the money seems extremely real, like when you're doing that, and it still is very real. But I think it's so important to understand that this is still a very human job, and you can't just go from risking $1,000 to 5 or 10 or 25 and not understand that seeing those dollar values are going to impact you psychologically. And it's very important that you grow in your risk at the same level in which you can, with your own human psychology, grow along with it.
I think we've done a good job though of having like guys like Raph, for example, on the call he'll be like, oh, what are you talking about? When you mention a number, like, you know, just arbitrary numbers here, but like, you know, you mentioned $2,000, like Raph, like, what are you talking about?
Yeah.
That doesn't matter.
That's totally fair, but like not
Yeah.
everyone has that.
Of course. I just think separating ourselves of what those dollar values can actually accrue you in life versus what they can do for you in trading.
That's one of the benefits, obviously, that we've had being on the call, and then but I'm saying is that in theory for your average like person, that's just like trading by
and that's
themselves.
the benefit of finding somewhere that you can trade that has resources, so that you're not you're not thinking about your trading account as your next rent payment. That's a problem. When me and Armand first started out, we were trying to trade a personal account.
Yeah.
And all of a sudden, the money that you see in that account is like how many months you have left to survive, right? Before you have to go like in debt or something. As opposed to when you're working at a firm where your growth is capped by the firm's resources, which is for most people effectively infinite. You're actually in a different position where you're just thinking about the money, quote unquote, as points in the game, and you just want to get as good as at the game as possible. And it's not a matter of what the money can buy you. It's more so what the points, how much you can accrue in points without losing too many.
Yeah,
Separating yourself from the P&L, right?
Oh, that's fair. I think that people probably put a little bit too much stress on themselves in these situations because it's so much easier said than done. For you to,
it is, because they're trading a personal account.
Well, yeah, but like
that's so hard.
Yeah,
growing a 25K account with the PDT rules is.
Well, even if let's say you have a 6-figure account, but you're using that to pay bills.
Yeah, of course.
I do think that one of the biggest stresses of this job is not the skill. I honestly think that you could probably teach day trading skills to many people, and they probably would get it.
Really?
It's how do you incorporate the human psychology and the human toll into this job, and then can you execute properly despite all that?
Yeah.
Right? Like, could you execute correctly and actually in those moments put on A+ risk? Like, could you
without stressing out over
could
the
you, for example, no, damn, I really need this money, but that is an A+ trade. I'm going to put that on.
Yeah.
Could you do that, but like mentally know that?
And when you see an A+ trade and you're up 0.5 R, you're like, oh,
yeah,
I got to take that.
Yeah, because you're like, that's a month or two
life-changing money.
Or you're like, well, it didn't reach the actual target yet.
Yeah.
Those are all extremely hard things, and that's kind of what really differentiates your success. Because like you think about those best trades, you put on A+ risk, quiet. You put on A+ risk, right? And then you only make 4x instead of 8. That extra 4x could be the entire difference, and that could be your entire capital that you are risking for the next 20 trades.
And that's the whole reason that you're sizing things so differently.
Yeah, and
for those
then
A+,
that different sizing is the reason why you're not growing as fast the next year, and then it's a whole domino effect, it's a whole parabolic curve. Like, that's the exact same reason, or that is the exact reason why when we were in a drawdown in 22, and we had those incredible trades of 23 with the whole like, regional banks, we didn't make as much because we were down. So then you get out of the hole and you start doing really well. But like, imagine we were green going to those trades. How much you would have pushed. How much more you would have made. How much more you'd have made in 24. How much more you'd have made in 25. Everything leads to the next.
It cascades.
Yeah. Alex asked us how to best determine whether you truly have edge, and if they would suggest refining 1 or 2 core setups and becoming a master at them in order to become profitable.
initially when I first read the question, my first instinct was use Claude, right? Because like now we're in the day and age where it makes sense to use AI because it takes such little effort to figure out if a strategy is actually profitable from a standpoint of back tests, instead of putting in the effort yourself of manually testing this thing, whether it's using the Pine editor in TradingView or Claude or whatever it might be. There are real ways, to, without being a coder, to figure out if your strategy is profitable. Now, all that said, there is a more practical answer to this. If you're not someone who's interested in chasing AI and chasing actual programming as a way of approaching your trading, if you just want to be an actual trader,
Fried ice cream.
fried milk, yes.
And then also another vodka soda. A vodka soda and then the fried ice cream. Yeah.
As many as at least one ball person and one banana bread. Thank you. Yeah, so, I mean, at the end of the day, determining if you have edge, you see the issue with that question is, having edge in a trading system that's aligned for a starter trade or versus a B trade versus an A plus trade is vastly different. Just because you lose once on a starter opportunity doesn't mean that it doesn't have edge. It just means that it might be a higher variance strategy, hence why you're risking so little on it. But as to whether you have edge on your 1 or 2 core setups, then it must be the case by calling them core setups that these are inherently higher graded trades. You're not going to call it a core setup if you're risking starter on it, right?
Yeah, so let me offer you one thing. If you're someone, right, and I'm not trying to speak us up right, but we have established us and we know what our best trades are. If someone were to tell us, just stay patient, wait for those best trades, don't do anything else, that'd be fine. If you were just starting out trading, you don't necessarily know what that 1 or 2 A plus trades are. You may think that you do, but without going through the B's, the B pluses, and the starters, how do you actually refine your trades to the point in which you have truly crafted and said, this is our A plus trade? So yes, you have to go through those trades. It's part of any trader's journey. And by me saying that, we're still so far from being able to say that we can only do 1 or 2 trades. I mean, frankly, where we are in our journey, I think that we are just starting to get to a point in which we would say we are, more elite or stuff. We're probably in the bottom echelon of that.
Oh, hands down.
Yeah.
And while I still think in a few years we'll look back and say the 1 or 2 core strategies that are A pluses, which I'm sure you know what I'm talking about, will still be there. I would be surprised to look back and say that those are our only 1 or 2 strategies in 5 years.
But
that are our core A plus strategies.
But I think that it can be very naive for a trader to think, oh, I made really good money in my first year doing this. I'm only going to do this now. Being humble as a trader and understanding that the markets significantly change per year. I mean, God knows that markets have humbled us. I mean, we both were doing great in 21, and then we both lost 7 figures in 22.
And in 22, what we lost 7 figures on was what we made 7 figures on in 21.
So we had to refine
dial that strategy back, refine it.
And even so, for example, I think that one of the great things that we've done of late is we've had a similar slow period in the market, very similar to the style of 22. Except we use what we learned in 22 to slow down a lot of our strategies now, right? We're not going through that same drawdown. Being very active and analyzing what works, what doesn't, you have to do that in order to keep refining those A trades. You have to understand, okay, what made that A trade, what environment, all those sorts of things. If you just become oblivious to everything else, and only focus then, you're going to miss out on so much information that could allow you to further refine your craft. I think that anytime that you feel like you should only focus on one or two things, the market will do an incredible job of humbling you, and you know this especially. uh, but, but a big loss will always hit you, and you'll have to look back and realize, how do you fix it? And,
Reflect on it.
you know, it can be very tough, and I think that finding ways to grow from those moments is what's critical, and being active and understanding how do you adjust is going to be the actual key for you to succeed long term.
I think it's well put.
If you don't actively trade US stocks, skip this video. It's not for you. If you do, we're betting you've tried every trading strategy, followed every advice available, and bought every course, but nothing seems to work consistently. We're betting that you always feel like you're so close to consistent profitability, but it's like there's an invisible wall that keeps you stuck and unable to break through no matter how hard you try. You're not alone. That's because a study of tens of millions of trades spanning 15 years, done by a group of researchers at the University of California, Davis, has shown that a staggering 99% of active retail traders never reach long-term consistent profitability. That is far, far worse than the generally quoted number of 90%, which makes this next stat even more interesting. At our firm, SMB Capital, our new stock traders reach the status of sustaining consistently profitable trader at roughly 20 to 40 times the rate of independent retail traders. That is an absolutely staggering difference in success rate. But why is this the case? We've put together a detailed video dissecting why that is and how you can finally break through to the consistently profitable side. So click the link on your screen now to watch this eye-opening video. When you watch the video, you'll also be getting 3 cheat sheets with the exact entry, stop, exit, and other precise execution rules for 3 of our top performing stock trading strategies that have made our firms tens of millions of dollars collectively. This gift alone is worth far more than the few minutes of your time watching the video. And if you haven't heard of us, we're not some funding company calling itself a prop firm. We're one of the world's most elite and respected proprietary trading firms, and we've been growing steadily throughout all types of market conditions since 2005. We have over 50 professional traders on our floor, including multiple 7-figure and even 8-figure per year traders. In fact, our top traders have each made nearly 20 million in net trading profits in a single year, multiple times. So click the link on your screen to watch the potentially game-changing video we've put together for you and get the exact entry, stop, and exit rules of 3 of our top performing stock trading strategies, all for free.